Welcome back. Mega cap tech earnings taking center stage next week. For more on what to expect, we welcome in Jeff Richards, Notable Capital managing partner. It's good to see you again. We're thinking about big numbers, capex. Is that what this is going to be all about next week?
I would certainly think so, Scott. I mean, obviously the AI trade has been the topic over the last 12, 24 months, and you don't need me to come on and fan the flames of that. But I will tell you, in Silicon Valley, there's just a ton of excitement around all the innovation that's happening. And obviously the capex has been laying the ground layer for what we're now seeing happen in cybersecurity and cloud infrastructure and the application layer over the next 12 to 24 months. So it's a great time to be here in Silicon Valley.
I mean, do you think as long as the capex numbers remain intact, that the story just continues and the stocks continue to go up? The minute that there's any hesitation to spend, the street gets a little suspicious with why?
Well, the biggest thing I think that's, a lot of folks ask how different is this from the dot-com bubble 20 years ago? And all of this capex spending is being funded by free cash flow from these big players like Meta, Amazon, Google, et cetera. And I think it's a little different from the last time around, if you will. The other thing that we're seeing now is these folks partnering with some of the private equity and large capital partners. You saw the Meta Blue Owl announcement earlier this week. I think we'll see more of that. And we don't see any lack of demand. I mean, the thing you always have to ask yourself is there demand for all of this infrastructure that's being built? And the end user demand that we're seeing among Fortune 500 companies around the world, as well as consumers. Let's not forget, ChatGPT just crossed 800 million users. 10% of the world's population is using ChatGPT. So I think it's hard to argue we don't see end demand. And as long as the end demand is there, it'll fuel the spending that funds all this capex.
What do you think the impact is of the fact that the companies that are leading this whole thing, besides the hyperscalers, obviously, are private? Their valuations continue to grow like wildfire. OpenAI, Anthropic, and you could go on and on and on. But because they're private, there's the opacity that exists in that scenario. So we just can't fully get our arms around exactly where this is going to end up.
Yeah, I think it's one of the big challenges in the markets today, Scott, is, I put this on Twitter yesterday, or X. One of the things that's very hard for public market investors to get their head around right now is the metrics around these private companies. So you mentioned OpenAI and Anthropic. You've got amazing companies that are private today like Vercel and Replit and all the players in the application layer, cybersecurity layer. They don't have any visibility into what's happening in that space. And it's not just the public numbers, it's also the analysts. The analysts that cover these companies, cover the public companies, don't have a lot to work with right now because, let's face it, the traditional software players like SAP, Salesforce, Adobe are not the folks that are leading the charge in a lot of the innovation here. And so one of the things we'd love to see is more of these companies go public. And hopefully we'll see that in 26 and 27. We had a healthy public market to start the year, obviously a bit of it on hold right now with the government shutdown. But M&A is at a record high. We've got the largest year for M&A really in history other than 2021. So a very healthy capital market, and that's going to return liquidity to LPs in our industry as well, the private equity and venture capital industry, who've been looking for liquidity for a few years now.
Do you think parts of the AI trade are in a bubble? And if so, which ones?
Well, there's a lot of speculation around quantum. That's one area that's been, I would say, sort of relatively unproven, and there were some announcements this week that the government may get involved in that sector. But one thing I'd point to in the software and application layer is if you look at in the public market today, there's only one company in the software space that's growing north of 30% a year, and that's Palantir. And Palantir trades at 70 times forward revenue. So when we talk about private company valuations and companies trading at 20 or 30 or 40 or 50 times forward revenue, they're often growing at 50 or 100% a year. So one of the things we often marvel at is some of these companies that are private might actually be more highly valued if they were public. And as I mentioned earlier, hoping that some of them will go public. But the public market is starved for growth. Let's get some of these companies to go public so we can have those companies are growing 50, 60, 70% and give public markets and analysts something to work with and data that they can see so they can see the underlying value of what's happening with this AI trade.
Let me lastly ask you, as a VC and a leading one, somebody made the point, and I just can't remember which notable person in the investing world did it in the last few weeks, that in periods of incredible excitement like we're in, and maybe it was Jeff Bezos when he was speaking over in Italy, it's hard to determine great ideas from bad ones. And you won't know it for a while. Are you facing this similar challenge yourself in your own business?
100%. It's part of the venture capital business. As you know, our business is a very long-term business, so we're investing in companies today that, most people won't hear about for 3, 5, or even 7 or 10 years. And so uncertainty is a big part of what we deal with. And when people look at the hundreds of billions of dollars that are going into venture capital, they say, oh my gosh, a lot of that is going to go into companies that may not prove to be winners. And we certainly saw that in the 90s. You have Amazon and Netflix, but you also had Pets.com and lots of other companies that didn't work. I think we will have a number of notable companies in this industry that will become extremely valuable. You're already seeing that with OpenAI, valued at over a $500 billion, Anthropic valued at over $100 billion. But we're also seeing growth rates. I mean, Anthropic is publicly disclosed. They started the year at around $1 billion of annual run rate revenue. This summer, they were at $5 billion. We've never seen enterprise software companies grow at that kind of rate. So we'll see. I think it's going to be an exciting next 12 to 24 months. But to your point and to Jeff Bezos' comment, will there be failures? 100%. It's part of our business. We understand that. Many of the companies we fund will not end up being successful. But the winners are going to be pretty impactful. The next Meta, the next Google, the next Amazon, those companies have been funded in the last 3 to 4 years. It's going to be a lot of fun to see how it plays out.
Jeff, we'll see you soon. Jeff Richards joining us.
Thanks, Scott.
Once again here on Closing Bell.